right, cool. Let's make a start. Cool. So this one, let's talk about time, yeah. And the reason why we're going to talk about the time aspect of the market is because, like a lot of your questions, yeah, a lot of the time you don't consider too many. You consider the price, like price is not people's problem when it comes to trading, and but you see, learning the aspect of time is where people struggle because everyone considers the PD arrays and runs on highs and runs on lows, but the thing is, people don't consider the time aspect. And the time aspect, remember, is time and then price. Do you see my point? It's not price and time, it's time and price. And do you see my point? It's not, you got to consider the time first and then price. Why do you think you have to consider time first? Anyone?
Tells you when price is going to do its thing.
It's not when it's going to, so it's kind of not a tell you like it's going to tell you what price does. It's a prompt. What the time aspect is, it's the prompt to you, yeah, when you can expect a specific signature to like occur in price. For example, are you expecting a liquidity run at 9 p.m. UK time? Are you going to expect a run on liquidity?
No.
Exactly. You won't expect a run on liquidity at that time of day. So you see the retail trader that just sits on their chart all day, which used to be me, right? They will try and trade those times of day because they have a misconception that trading more is better for you. That's a different discussion we can go into after. And they believe that, every single time it moves from this, if we get a rejection here, it's going to go run in the liquidity pool after. You see, the actual delivery of the algorithm that delivers price and the entities that deliver the price, they don't work on no price factors. There is no price factor they consider. The only thing they consider is a timeline of when specific things need to be done. And that's only based off of time, right? Now, a lot of the time, people will try and take a trade outside of a kill zone. Now, I'm not saying you can't trade out of the kill zone, but I'm saying the probabilities for that trade significantly decrease because it's outside. You see, you can trade anything you want, really and truly, but is it highly probable is a different question. You agree, right? We're open to trade at any time or any price that we want, right? But is every single time and is every single price point in the market probable? I'll give you this example, yeah. Is it more probable to trade at a PD array or not at a PD array?
PD array.
At a PD array. So that's the price aspect. Do you see my point? That's the price aspect. Cool. That's probable to the price aspect. But what about the time aspect? When do you think is the most probable times? Now, of course, if you've done chapter 3, I've taught you the most probable times. It's inside of those kill zones. And why is it the most probable? The reason is this, because in those times, right, the algorithm is going to go into a mode of liquidity delivery, right? It goes from liquidity generation to liquidity delivery, right? Now, the liquidity delivery occurs through these two London open kill zone. That is when liquidity is looking to be delivered. Now, the idea of liquidity being delivered, what does that translate to visually on your chart? What does that look like? Where is the liquidity resting in the market?
Equal highs, equal lows, isn't it?
Tops.
Highs and lows, yeah? So delivering liquidity means what?
Taking them lows, isn't it? Or
taking the highs and taking the lows. And this is what you want as a trader, right? Now, you see in saying that, liquidity delivery, in specific times of the day, you're hunting, or you should hunt on it. If you're day trading, you should hunt a run on stops that's opposing your bias, right? So if you're bullish, you want to see a short-term low get taken out and to go higher, essentially. If you're bearish, you want to see a short-term high taken to go lower, right? Now, this is where people slip up because they think that, it's taken out this high, so let me get on a continuation. But because they don't understand the time aspect, they aren't able to differentiate between a run on stops versus a actual, continuation move. Do you see my point? So for example, you're bullish, yeah? Now, New York open kill zone, right? You see why we consider 8:30 is because of this. We want 8:30 as to kind of retrace essentially, and then the latter half of the New York kill zone, we want to see again, a push into our higher time frame area, given that it's not exhausted. Do you know what I mean by given that it's not exhausted?
Can you go into that, Funny?
Say that again.
ADR.
So the ADR, yes, but now let's
is it
say,
like slowing down?
so you see
Most of the ADR has been taken up in it.
that it's not just the ADR though, it's this, isn't it? Remember, we are working across the PD array. When London trades into a PD array, we can expect New York to reverse. New York has a probability to reverse. But if London is moving towards the PD array and hasn't got there yet, and New York, we're still not at the PD array, New York can expand towards it. It's going to go towards the PD array still, isn't it? Do you see my point? Let me show you an example. So let's say, let me draw a box. Let's say there's a PD array here, yeah? Let's say this is a PD array. Now, London is trading here, right? This marks the end of London, yeah? Are you expecting New York to reverse now or to, still go towards a drawn liquidity?
Go into it, innit?
Go into the drawn liquidity, because this is what you're doing. You're working along the PD array matrix. The way you're framing reversals is this, off of the PD array matrix until you hit a higher time frame PD array. Yeah, so if London is still not here, right, the start of New York, what I'd like to see is that move lower to then go into that PD array. And then from here, we can see if there's a willingness to reverse intraday level, right? Now, if London went into here and start consolidating, what can you frame for New York?
New York's gonna reject it, innit?
The New York reversal. It's
Yeah, I'll
all
reverse
off
it, yeah.
of, and what is it all off of? The time you hit the PD array. This is the blending of time and price. You see, people think time and price is just trade inside the kill zone. That is the most bankrupt understanding of smart money concepts. Everyone, even retail, acknowledge the London and New York session, not the kill zones that we use, but they actually still acknowledge the fact that these are high time frame, high volatility times to trade. But the way we understand it, the way I'm teaching guys is how you're moving through time given the areas of price that you're hitting, right? Now, a question I get asked quite a lot here is this. You see, let me go on the high time frame daily. Just remove these. You see this here? I've got so many messages saying market structure shift here, right? A lot of people message me saying this is a market structure shift and it's starting to do the look back period and whatnot. And I was saying this. Is it a market structure shift? No, because the things you got to consider for a daily market structure shift is this year. There has to be like an actual fundamental backing it. Do you see my point? Because these are the higher time frames. Now remember, what's the higher time frames? What's pushing the higher time frame? Is it just price? Like, is it just is it just technicals, or what's pushing the higher time frames? What's the higher time frames? Yeah, on these currency pairs. Pardon?
Macroeconomics.
Macroeconomics, right? It's you're actually going to need like a news driver to shift the attention of this, like the market, right? That, and you have to consider the, like, for example, where do you hunt your intraday market structure shifts? Anyone? You see, when you're day trading, right? What areas do you hunt your, let's say, where would you hunt a 5-minute market structure shift?
In a 4-hour period.
High time frame period.
Okay, so so using that logic, where should you hunt your daily market structure shift?
Weekly PDR.
Weekly, monthly, something higher than the daily time frame, right?
Yeah.
That's the thing you guys need to consider. There has to be even a higher time frame context to the daily time frame. And you know what it is? A lot of people think that the daily is a super high time frame, and it's because of the misinformation online. They think that the daily is like a super high time frame, like way higher than you need, but it's not. You see the daily is actually, you see industry standard. The daily institutionally is how these online traders treat a 15-minute. That's like the comparison that you can make, right? Now, your daily market structure shifts, they need to have fundamentals behind it. Now, this is how you're going to tell if this is a run on a level vs a run on a market structure shift. Now, also is this, what was happening? Who's watched the weekly commentary? The most recent one that I made on Saturday.
I watched it.
Yeah, I watched it.
Yeah. So when we ran up higher into here, what happened on the COT data? What happened to the short positions by the commercials?
They increased by like
Increased.
20%.
It increased, right? Now, using this idea as well, it kind of tells you, are we running a level or is it like a real market structure shift? Do you see my point?
Yeah.
That's how you need to consider, is there a macroeconomic reason I need to change my bias? Is it at a higher time frame PD array compared to the daily, like a monthly PD array, or have you already swept the monthly level, or have you swept the weekly level for now us to use those stops that we raided to fund the move in the other way, right? That's the things that you need to consider. Now, you see, a lot of people, they get into the fact, especially a lot of people in here, they actually trade crypto and they kind of are victim to a lot of the news and Bitcoin pumps and whatnot. I'm going to give you this simple, broken down thing that I want you guys to actually perceive the market in. Yeah, this market is no different to any other market, other than we see candlesticks for these financial markets, and we see like the time and price chart. We see charts for them. You see, right? Approach this as like a business-minded person. I'll give you an example. Has anyone ever done like an Amazon FBA or like dropshipping or anything?
I'm gonna do that now.
Okay, you're familiar with how it works, right?
Yeah.
If you see that everyone is buying a product, you being the dropshipper, what are you gonna do?
Not buy it, but sell it, innit?
Sell it. That's what you're gonna do. You're gonna sell it. And what are you gonna do before you sell it? You need to source it for a cheap price.
Yeah.
That is what smart money do every single day in this market, right? They will, if they're looking to sell, they will source whatever is they're looking to sell, given Euro USD, right? Let's say it's Euro USD, they're gonna source it for cheap. Now, where is sourcing it for cheap?
Below old lows.
Below
Discount.
old, yeah, discount. They're gonna go source it. They're gonna buy it at the lows, and they're gonna sell it above the highs, because the highs, yeah, that is an expensive price. An expensive price where there is willing buyers on their buy stops. You see, if you can just apply this mindset when everyone is trying to, purchase a specific market, right? And the technicals and the actual fundamentals and the technicals, the intermarket analysis does not back this market going higher. You need to start getting in the idea of, I'm just looking to sell when all these guys are buying. Now, where are all the willing buyers? They are above buy stops. They're above highs in the form of buy stops. Yeah. Now, I'll give you this example. This is a thing that I tell people, that I give to crypto guys as well. What you're doing is this: in a clear downtrend market, right? For example, crypto, every single pump higher should raise your eyebrows. Every single time there's a run on a high in your bearish buy, yeah, it should entertain you to start becoming a participant in the market. Because you see what it is here. You see, the misconception is this: you see, running this high, you don't need to get in above the high. Some people think that, oh, I didn't get in above the high, so I've missed the entire trade setup. No, because what happens? Who's on chapter 4 here?
Yeah.
Anyone? Yeah, cool. Above old highs, what happens? Offset what?
Accumulation.
Distribution. For above highs is offset distribution. Yeah. Beneath old lows is offset accumulation. When you run this higher time frame, high, now these buy stops are triggered in, and they're going to be taken to what? A sell side liquidity pool, right? We've moved above a liquidity pool. So let's move beneath a sell side liquidity pool. The chance now, right, for you to distribute these lows, I mean these buy stops, is from where you are right now to a clear sell side liquidity pool. This low and this low. The distance from there, from here to there, right? The candles printing, the time it takes, and the distance for the candles to print there is your chance to get in on the move. Do you understand me? Or did that go over your heads?
Yeah, so the buy stops that rest above the highs are going to
Yeah.
get distributed to the sell stops.
Now it's like this. Where is those sell stops going to be taken to? Or where are those buy stops above the highs going to be taken to? To
The lows.
people that want to
So,
exactly those buy stops are going to be taken to sell stops. So now you have what? That's your draw on liquidity. Do you see my point? Cool, we're taking buy stops now. Where's it? This is what happens. You see from here, when we run that high, you have to make this mental computation in your head, right? Where is the market likely to reprice from here? Do you see my point? From here, where's the market likely to reprice? Low and a low here. Okay, cool. I'm gonna try and get an entry now, right? To get into the distribution to my drawn liquidity being this low and that low. Now, that can be on any time frame. For the higher time frames, this is now your bias. Do you see my point? Because you can use this idea, right? As long as the candlesticks keep printing in that direction, that's going to be your bias. On an intraday level, that's going to be you looking for your entry mode. Do you see my point?
yeah.
Anyone got any questions on that? Any questions on that?
Nah, not on what you said, but I've got a question here.
Yeah, go for it. Yeah, go for it.
So you see that price range we're in now?
Yep.
From that high back in like
Yeah.
September.
What here?
Yeah. To the
Yeah.
low.
Yeah.
You see that order block?
Which one?
4 up candles.
What here?
They're like hammers and dojis and
1, 2, 3, 4. But even all of this 1, 2,
no,
3,
the bearish order block.
the bearish order block.
Yeah.
Here.
Yeah, that.
Yeah.
You see how you traded above that?
Yeah.
Would that high be part of the PDRA or not?
What the actual high is like here?
Yeah.
No. It's not.
So
This high is.
what would you say the rejection is then off? Because obviously we've taken that high out, but we've like displaced them lower.
This, you don't move. You see your high time frame order blocks and fair value gaps. You can trade into them more than one time. You know, people think that. So on an intraday level, we don't like to see a few taps into the thingy, and the reason is because they move fast. Do you see my point? You see your high time frame PD arrays there. As long as it's in a 3 month, yeah. As long as you see this PD array, it's in within 3 months, isn't it?
Oh, so you highlighted that order block in it.
You see it's within 60 days, isn't it? I think I mentioned this on a weekly commentary before as well. As long as the PD array is within 60 days, yeah. So this from here shows 60 days. And you see as every new candle prints, this is going to go back one. Do you see my point? Yeah. The higher time frame, the daily, consider all the PD arrays, especially fair value gaps, yeah, within a 60-day range. You can trade back into those things. Now, do you know talk about why that is?
No, so I got a quick. So what did you highlight there?
This
In the
up
red
close,
box.
this up close candle.
Okay.
Okay, the reason being is this. The algorithm needs a reference point to price, right? Now, the first things it's going to look back to is its initial look back rate, which is 60 days. Now, there's a difference between this look back and the market structure shift look back. Do you see my point? The market structure shift look back is for targets, right? Buy side and sell side targets for when there is a shift in market structure on the high time frame daily. In general, for your trading, you can use the last 60 days and highlight the PD arrays within the last 60 days. And you can frame that these arrays are the arrays that I need to consider, you know, for my higher time frame analysis. It's going to use these arrays as a reference point to price as long as it's in the 60 days. The arrays, even if they're touched within the 60 days, it will still go back to them. This is called recursion, by the way, right? Algorithmically, this is called recursion. It's going to use, right, previous inputs to create outputs. Now, how long, like which inputs, because there's many inputs. That's when the time aspect of, the 60-day range comes into like play. Do you see my point? As long as it's in 60 days, right, on the higher time frame, and the way I done it was this ruler, this tool here, if you go from where you are and then drag it back 60 days, that's this candle, right? You see all the price arrays from inside here. This is what you're working inside of. This is how you can start framing the moves to your higher time frame PD arrays. Makes sense?
Omar, I've got a question real quick.
Yeah, go for it, bro.
So you're saying in the last 60 days, price is looking at whatever. I know for a lot of weekly comms, you were looking at like that 3-month fair value gap and like on the weekly charts and that. So how does that work if we're only meant to be looking at like the last 60 days?
But there's a difference there. That's what we're working towards. That's our draw on liquidity. This isn't full draw on liquidity. This is to frame our trades in line with bias. Do you see my point?
Oh, okay, yeah.
Do you see my point?
Yeah, I see you. Cheers, man.
Sweet.
Omar, question.
Yeah, go on for it.
Can you consider the kill zones as liquidity injection points?
Yes, yes. Specifically, make a note of this. London session, 8:30 a.m. for the New York session, to New York time, especially the 8:30. Because within the kill zone, there is specific liquidity injection inside of that kill zone. Do you see my point? It's not the whole kill zone that's a liquidity injection. Yes, it's an increase in volatility, but inside of the specific kill zone, there is specific liquidity injection. That's very true. Those are the times, 3 a.m. and thingy. If you go look at where a lot of higher the days are made when they're made in London, it's around 3 a.m. Give will take 15 minutes. So 2:45 to 3:15. Any other questions? Any questions on like any of the lessons that you guys are on? Maybe you're stuck with them, or anything like you think that we should incorporate or whatnot?
Yeah, I remember someone saying about the back testing.
Ah, okay, cool. The back testing, that's good. Let's touch on that. So chapter 5, I made a whole lesson on how to backtest effectively. Now you see a lot of people, it's on YouTube. You see now, I don't recommend you guys using YouTube. There's no reason for you to. I don't even remember the last time I watched a YouTube video in trying to learn how to trade. Maybe it's been 3 years. Kevin, what is it that you're unsure about the kill zones? Ask a question in the chat, like a specific one, and I'll answer after we talk about backtesting. So you see backtesting. All backtesting is this, yeah. It's just a time that you're going to use to actually practice concepts that you learn. It's like this, yeah. You don't know what an order block is now. I've introduced you to an order block. So you're going to go back and start looking for them, saying, oh, okay, I'm able to identify that this is an order block. Come back into it. Okay, cool. This is what it looks like. It's for you to start identifying, patterns and understanding concepts and seeing concepts before. It's just for your understanding. Don't think that my back testing is going to be a representation of my forward testing. Back testing is this, making you comfortable enough so that you could have a better chance of seeing it in real time. Do you see my point? That's how you need to treat back testing. One of the biggest skills that I said, your back testing, I said you need to split your back testing into sessions, innit? Right? You need to have clear focus points for what your back testing is for. Your back testing one of the biggest reasons should be for pattern recognition. And I say this to people, you need to be able to identify arrays, right? You need to be able to identify your price arrays very easily. You need to be so fluent in it, because this is what's going to aid you. Being able to have that pattern recognition done through backtesting is going to allow you in real time to identify it. Do you see my point? It's all backtesting is this. It's helping you for when you're looking to forward test. Don't use it as a measure of your performance. It's not a measure of performance. This is where people go wrong. I'm going to backtest my strategy and see how many times it wins. Don't do it like that, because you need to do it in real time. Because in backtesting, Ria, there is always a level of hindsight. Whether you like it or not, there's a bias to it. You're going to say, yeah, I would have not taken this one. I would have taken this one. This one fits my criteria, whatnot. Do you see my point? Use it as a means of being able to identify and learn the concepts so that you can identify again in real time. Forward testing is where you're actually seeing if you can consistently do it or not. The replay feature is good, right? Now, the replay feature is as good as the person practicing makes it. If the person that's using it is purely just doing it for to make them feel good, obviously it's not as good. The way I recommend using it is like this. So let's say you get a bar replayer, just zoom all the way out, like zoom all the way out here, and just like blindly just like press it somewhere. Like let's just say like over here, right? Just wait one second. Say let's put it over here. Yeah. Now you see from here, the way you're gonna do it is this now. Think of it like you're gonna trade next day. How are you gonna do it? You're gonna use all your high time frame analysis. See the likelihood of the next weekly candle. So if you look at the weekly, right? What is the next likelihood of the next weekly candle going to? What have we done? What's the draw on liquidity? And then you're gonna start, building your daily bias. And then on a 15-minute chart, you'll, press replay, slow down the replay mode. Like, you can what's it called? You can slow it down so that one sec. Where's the bar? Because I don't even use this. Like I don't use this at all. Where is it so that it's this
It's at the
It's
bottom.
at the bottom.
It's at the bottom, man.
You see where it says
the
one,
bottom?
1x?
1x. Yeah.
Oh yeah, this. Yeah, so like here, you can change it like 10x, 3x. You use like a 0.5x because it's gonna print like it's gonna print slower. And then what you're gonna do is you're gonna act like this is candles printing in real time. So when you do the replay, put it back on your higher time frame chart. From that point, you're treating it like it's like a next day trading. Use your high time frame analysis to try and derive a daily bias, right? And then you're gonna try and find an intraday setup that's in line with your high time frame bias. Or if your high time frame bias is not there and you can't depict the bias, and then just let that day pass. And when the new candle daily do it like you're actually trading, because it's essentially mimicking real trading, isn't it? In saying that, I want to touch on the idea of not trading with a bias. You see, when you can't depict a clear direction for the daily candle to trade to, yeah? So if you go to the daily of this, get out of this. For example, you see like this candle, like we dipped into the fair value gap and then we came back and it's like a doji. Can you not hear me?
Yeah.
All right, cool. So you see this candle dip down into this fair value gap and came back. Now this is the thing, right? Is that candle gonna trade above higher, or are we still gonna trade down lower into the fair value gap? This is it's indecisive given what it's done in it. Do you see my point? Because overall we're like long-term bearish on the Euro USD because we're bullish on DXY. But this candle dipped down into a bullish fair value gap and then rejected and created this, this doji-like candle. So, I'm not trying to take longs overall on the daily for the Euro USD. So what do? I can't depict a straight bias, right? So let me sit out the day. Let me sit out and get the next candle to show where is the likelihood of it going. Now you see how we're displacing away from taking out these highs, right? And you see how we're trading into this fair value gap. I'm waiting for the candles thingy. I'm waiting for the candles close, and I'm waiting for tomorrow's London session to see if we displace lower again. Do you see my point? Because tomorrow, if we create a fair value gap tomorrow, right? You see the next candle, we trade down lower and we keep this gap here. That is something I'm going to keep in, right? Essentially like this. If the next candle prints down lower like this, this becomes a fair value gap, right? we can frame the retracement into there to then carry on lower. Do you see my point? This is where letting a few candles print or a candle print the sideline a day helps you, you know, depict the direction that you want. And it's also for intraday as well. You might not want to enter on that candle. You might want another candle to show you where the open high low close is gonna likely print to, and then you can start looking to get in. There's no rush to get in. Do you see my point? You rather wait for, you know, a higher probability chance for you to get in. You rather get, you know, you want the strongest conviction of price trading one way over the other way. Do you get me? If you can't make that conviction of price from what it's doing is likely to trade this way, lower instead of higher, if you can't depict that, don't trade. You always need to know, is the willingness, it's like a seesaw, isn't it? Is it more likely to go higher or lower? And why? Not just off a gamble. Now, I think it's going to go higher. I think it's going to go lower. From the information you have, the candlesticks information that you have, is it likely to go and print lower or higher? If you can't depict that, sit on the side and say you can depict that. Do you all understand that?
Yeah.
That's very important, because impatience kills you in this game. I'm telling you. You see people you see on Twitter, you know, last week, right? I saw many people, right, that usually they perform well and they all said, I should have never traded this week. I knew it was a consolidation, but I still traded it. And those are people that are very like transparent, and those are people that, you know, they do well, they show that they do well, whatnot. Don't take it from the kids online that say they win everything, because we know what they're, you know, like, I don't even need to speak about that. But I'm telling you guys now, if you can't depict the buy, it's not if the person next to you can, it's if you can't, don't trade it. Do you see my point? What was the question someone had about?
Hang on, did you just say that Sir Bugs joined and then Sir Bugs left?
I was just about to say,
I can't be the only person that just seen that.
yeah, I saw that too.
I think it's someone just trolling.
Yeah, that's someone taking the piss, messing with the names. That is, it's got to be.
Even if he does, man, he can come here. I'll teach him.
Come learn something.
Kevin, did you get the question for the kill zones again? This is recorded as well, so don't worry if you want to rewatch it. What's the question? I'll just wait for him to type it. I don't think he's on the mic. Anyone else got any questions given like the kill zones? And you see the idea of the kill zone, right? It's the same thing. Like, it applies to all aspects of time, isn't it? Remember, we have quarter of the year, then we have the day of the week, and then we have the time of the day, right? On a bullish week, we don't like, what's the London kill zone time? It's no, don't Google it. It's going to give you the retail time. Don't Google it. It's 2 to 5 New York time. In New York time, look, you see my time here is New York time. This is not the time where I am right now. In New York time, it's 2 to 5 a.m. For London, and it is 7 to 10 a.m. for New York. Those are the two times. It's taught in the mentorship.
ICT says it's 7 to 11 though.
Pardon?
I'm sure in one of ICT's videos it said New York is 7 to 11.
He even says from one video it's 1 to 6 on the London, but don't. He says in the weekly commentaries just follow the 2 to 5, 7 to 10.
Cool.
The reason is because you have London close at 12 to 2 as well, New York time.
Yeah, quick question. I was gonna ask. Yes, 5. I was gonna ask. Do we class London close as a kill zone?
London close, yeah, it's a kill zone. Now you see, for two things there, you can either use it for profit taking, right? You can use it for profit taking. So if you had a trade in New York, now given that New York hasn't run to a liquidity pool inside of the New York session, you can frame the run to that liquidity level in London close kill zone. So let's say for here, yeah, using what we have here. Let's say this is not a daily. Let's say this is a 15-minute, and we're working towards this low. And let's say the New York session gets to here, right? London kill zone may like offer a small retracement, and then go and take the low.
Oh, like today, yeah.
It's like this. London kill zone will run liquidity, given that New York has not. Do you see my point? If New York does it, London will consolidate. Do you see my point? It's the same relationship between all of them. As long as there's ADR on the table, right? That's one. And it's based off of what the previous session has done. Do you see my point? Because if London went and ran stops, New York is not in need to run stops again. New York will probably be used to distribute those stops.
Okay.
So it's like this. Let's say London ran stops and then New York is distributing them, but hasn't quite got to the liquidity pool to complete the distribution. London Close will go and finish it off. And also, if there is a news event at 10 a.m., what's it called? 10 a.m. New York time, you can frame trades into London Close. London Close is 10 to 12, not 12 to 2 p.m. by the way. Sorry, it's 10 to 12. I was getting mixed up
'Cause
with
you know what I was doing sometimes, yeah?
Yeah.
On days when it was bearish in like London and New York, yeah?
Yeah.
I would try and buy that retracement in London Close and get smoked. Like I've only won it a couple times, but having that, I'll get smoked.
London Close offers a good trade setup as well. But do you know what it is? It's a small scalp. It's not a day trade. Like it's not like a big move. It can offer a small scalp. Like so basically, you know what you said, you get on the retracement. That retracement is this, you should get in on the retracement to the move lower. You see how you bought the retracement, like for
Yeah.
example this, that you probably buy here then get smoked.
Yeah,
here,
yeah, literally.
You'd want to frame the retracement and then lower, given that there's a liquidity pool, and also it's very good if there's a news event, because sometimes you get the news event at London close time
Okay.
at 10 a.m. You see what's it called, New York USD news, yeah, it's either at 1, it's either going to be at 8:30 or it's at 10, unless it's FOMC that's later on at 2. It's always 8:30 or 10. Do you see my point? So it's either the New York kill zone or the London close kill zone that the news events happen. Given which time it is, you can frame the trade to the corresponding session.
And you got episodes on it, yeah?
I touched on it in a weekly commentary, 100%, the London close kill zone.
Calm.
This now zoom further to, like, you know, we touched on it again, so I'll just make sure in the title that I mentioned the idea of that London close was touched on. But it's more so of a, you see, it's more favorable to trade the New York and the London Open rather than the close of the sessions, because you see the close of the sessions is like, you know, it's the final trades of the day, innit? Like the final attack to the liquidity pool, or it's just going to go back into the range. More times than not, it goes back into the range.
Yeah.
What time is London close kill zone till?
London close is 10 to 12.
Okay, cool.
10 a.m. to 12 midday New York time.
Yeah.
I think that's 3 to 5 GMT. What time do you say New York closes? New York close or London close? New York closes 7 to 10. We don't trade the New York close for forex pairs.
Yeah.
It's not a fair value gap yet, Ace. It's not a fair value gap yet. We need the third candle, right? For now, yeah, there's a level of imbalance left here, right? We can see the move up into it. But for it to be a fair value gap, yeah, we need that candle to trade down lower. I was saying that this is a fair value gap, saying this. Let's say this candle then trades like this. The next candle trades like this. Let's say the next candle's like that. Then we have that fair value gap we can frame a retracement into to go lower. That's what I was saying. Yeah, if that candle, yeah, that's what I meant. Anyone has any questions? By the way, we have ISM manufacturing tomorrow as well. USD Red News event, economic driver. Just a heads up for those that are trying to participate. If you look at the DXY, just thingy for the, what's it called, from the weekly commentary, we wanted to see the move up into this fair value gap, right? And we want to see, right, if we're gonna go and start saying we're gonna start favoring one side, how do you guys think we can start favoring one side to another? Just, you know, try and think, how would you favor one side more than the other?
If it's disrespecting, like opposing price range.
Very good. That is the answer I was looking for. That's spot on, right? We have this bearish. This is a bearish fair value gap, right? I can't even say your name because it's iPhone, but that's such a good answer.
Nah, it's
You-
mostly.
Oh, okay. You see, this fair value gap, we trade through it. We're disrespecting a bearish price array. So what does that show? It shows that, you know, the algorithm is actually disrespecting bearish price array. So you should start favoring longs over shorts because that it's not respecting bearish price arrays itself, right? I'd love to see the next candle trade higher, a fair value gap in here, trade down lower, and the move higher with FOMC. That would be like textbook.
Wait, FOMC is on the 2nd, isn't it?
When is it? Yeah. And then we have NFP on the Friday as well.
Yeah, so we sit out NFP and
Yeah, this week is gonna be quite like it's pretty jam-packed.
so would you say next week it would be okay to trade then?
You can trade it, don't get me wrong, you can trade, yeah, but just make sure you are very careful with holding trades. Do you see my point? Like if you have a clear draw on liquidity, like you see from, I think we had a Zoom. Remember we had that late night Zoom on like, I think it was like a Friday or Saturday or something. I think it was the Thursday, yeah. And we said for Friday, right, we wanted to see the move into this fair value gap. Did anyone attend that Zoom?
Yeah.
I know CMC and Alex came.
The
into
Zoom
that
at
one.
like 1 a.m. innit?
Yeah, it was pretty late.
Yeah.
We wanted to see that move into that fair value gap. So just using that idea that they had that fair value gap, yeah, you could have framed the trade into it using, you know, even today, you could have framed the trade going into that fair value gap, right? If you have a clear place on the daily that the market is pricing into, you can frame a trade into that direction, right? Even in the face of news events. But you see, when it comes to New York session FOMC, call it a quit. Just don't. London session, fine, hunt, that's cool. Because there's a lot of time from London to the actual, you know, range that's usually built for FOMC. Same for NFP, you can hunt the London, where I don't recommend it. If London ranges, don't go for it at all, right? You need displacement. You see, one thing I hunt for in the kill zone that I'm trading is the displacement. The displacement away from the liquidity pool that's opposing my bias. So you see like this, yeah? You see like this. If this was intraday and I'm bullish and we traded beneath that inside a New York kill zone, we traded above that and we displaced now. And look, the displacement is creating imbalance that's breaking candles highs. Not these highs. I'm always looking at the open high low close of the candles, right? If I see us go above here and we leave a fair value gap here and we've already taken this low, I'm getting in that fair value gap and I'm going to target these highs. Do you see my point? I'm looking for fair value gaps left in line with my bias after taking the opposing side to my bias's liquidity. So if I'm bullish, I'm waiting for a sell side liquidity pool to be taken or a fair value gap being rebalanced and that displacement away from it.
All right. So could you argue now that maybe the market maker buy model is being offered here on the DXY?
On a full hour, we're seeing it. Yeah.
Go to an hour. Go to 1 hour.
Yeah. I know. Even on I think it's better on a 2 hour. 1 sec. Yeah. Like here, right? 1 hour. 1 hour. You're saying like this initial consolidation for USD as well.
Yeah, market maker sell model, isn't it?
Yeah, and remember, what's the market maker sell model? It's a movement from
Premium to discount.
market maker sell model. Discount to premium, and then back lower.
Yeah.
Now that high got run, and these highs got run, and it's inside of here, and we're trying to work our way down now. And I had 0.99. The reason being it's like this, the top of this candle, I think is like 0.99. Yeah, it's like 2 pips off. You see like here it's like 0.9. These 2 down close candles with this fair value gap. The reason is, yeah, because that's going to create some level of resistance before going to run the low. Do you see my point? That's the things you got to consider.
So you can expect a retracement at those levels.
Yeah, like a level for redistribution, go up again,
So either like
for redistribution to go lower.
so like
But-
a little consolidation.
Yeah, but you see on an intraday, that would trip you up. Do you see my point?
Yeah. No, I hear you.
Yeah, cool.
One more.
Yeah.
If you could going back on the 3 hour, please.
3
3 hour, yeah, please. On
on
the
this on the DXY.
Mhm.
On this chart or the DXY, bro?
sorry, bro.
DXY.
Just wanted to say that, you know, once it trades past that consolidation range above on the left
Ye-
side,
All of this, yeah.
once it trades past that, is the market maker buy model over then, or does it have to take out the other high over there on the top left?
I'd go for that target, to be honest. It's because this is the start, and the market maker buy model will always look to make a final expansion higher, and the sell model will make an expansion like thingy.
All right.
Any other questions?
When it comes to choosing the initial consolidation for the market maker sell or buy model, how would
Yeah.
you do for the origin, which like consolidation to choose, or how?
Even this, yeah, consider this one first, because you see how we have, so like you see like here, yeah, we have it, and then you want displacement. It's the initial consolidation before the first displacement and reaccumulation. That's the way to find the initial. Look for the clear consolidation before that side of the curve is offered.
All right then. So you see how that how to explain it? You see the equal highs, yeah?
Yeah.
The high to the right.
This one,
Yeah, you see that the up close candle.
yeah.
So would you say the consolidation to the left could be the origin then?
What here?
No, literally just like a little
Here.
bit. Yeah.
So like for example, you're saying this.
Yeah.
You're saying here. Take this whole thing. This.
Okay then.
Take that, right? Take this one. Now, this, right? Run this. Look, the distance between here to here as well. That can be your new target. Remember, you're working your way back up to range. Buy sell liquidity pool at a time. This one, then you got space to run this one and this one. But I think we run this. I think we run that in the same go, to be honest, in the same leg.
And at the SMR, is that when you look for signatures like breakers or mitigations?
From the
Again-
from the SMR and the displacement, right? When you're displacing away from, when you create the smart money reversal, I like to let the first leg play out, right? I like to let the first leg play out to see like this. You see like this rebalance of this fair value gap. Let that play out and then expand again. Then you know like, okay, I'm likely to be in a market maker buy model. Look for the next retracement to get in with the next expansion. That's the silver bullet, the second leg of the expansion.
Okay then.
Because the market maker model, why it's so good, yeah, it has
Yeah,
many entries in it,
I
and you
think-
really only need one of them.
Yeah, I think you misunderstood the question. I'm saying like at the smart money reversal.
Yeah.
Yeah, at that low.
Yeah.
Signatures would you look for? So would that be like breaker blocks and the mitigation blocks?
Yeah, but even in these retracements to low here, I'd be looking for it as well. Because
Oh.
this is, you know, let's say this is 4 hour, 3 hour chart, right? At these levels on the 5-minute chart, you'll be hunting the signatures, you know, intraday 5-minute to go again higher. Reversals essentially at this point.
No, I get you. Okay then. Thank you.
Cool. Sweet. So should we call it a session? All right, cool. I think we'll call it a session. If you guys have like any specific Zooms that you want held, like maybe like one. So the way we used to do it was like chapter 1 Zoom, chapter 2 Zoom, chapter 3 Zoom, and we just used to cover any questions to do with that chapter. We could possibly consider doing something like that format again. Or if you have just a specific like talking point you want to consider, message me and we can probably thingy end the recording as well.